The Federal Home Loan Banks are 12 U.S. government-sponsored banks that provide stable, on-demand, low-cost funding to American financial institutions for home mortgage loans, small business, rural, agricultural, and economic development lending. With their members, the FI banks represents the largest collective source of home mortgage and community credit in the United States. Overview: the FI bank system was chartered by Congress in 1932 and has a primary mission of providing member financial institutions with financial products and services that assist and enhance the financing of housing and community lending. The 12 FI banks are each structured as cooperatives owned and governed by their member financial institutions, which today include savings and loan associations, commercial banks, credit unions and insurance companies. Each FI bank is required to register at least one class of equity with the SEC, although their debt is not registered. A primary benefit of FI bank membership is access to low-cost secured borrowings, known as advances, which are funded by the FI banks in the capital markets from the issuance of discount notes or term debt, collectively known as consolidated obligations. COs are joint and several obligations of all the FI banks, that is, any debt issued on behalf of one FI bank is the responsibility of all for repayment, with the issuing FI bank having the primary responsibility. The Office of Finance serves as the fiscal agent for the FI banks, with responsibility for offering, issuing and servicing COs, as well as preparing the combined financial reports. Although the individual FI banks are SEC registrants, the FI bank system is not. Thus, the FI bank system financial reports are properly viewed as a Euro common Euro rather than a Euro consolidated Euro ownership. The 12 banks of the FI bank system are owned by over 7,500 regulated financial institutions from all 50 states, U.S. possessions, and territories. Equity in the FI banks is held by these owner members and is not publicly traded. Institutions must purchase stock in order to become a member. In return, members obtain access to low-cost funding, and also receive dividends based on their stock ownership. The FI banks are self-capitalizing in that as members seek to increase their borrowing, they must first purchase additional stock to support the activity. FI banks are exempt from all corporate federal, state, and local taxation, except for local real estate tax. The capital investments in FI banks receive preferential risk-weighting exemption treatment from the Basel II rules. The FI banks pay an assessment of 10% of annual earnings for affordable housing programs. The mission of the FI banks reflects a public purpose, but all 12 are privately capitalized and, apart from the tax privileges, do not receive taxpayer assistance. Financial results and condition: on October 30, 2013, the FI Bank's Office of Finance published the third quarter combined operating highlights. For 3Q13, the FI banks recorded net income of $537 million. Combined assets of the 12 FI banks were $789.1 billion as of September 30, 2013. Of this total, advances equaled $465 billion. Investments were the second largest component at $242 billion. Mortgage loans held in portfolio were $45 billion. The FI banks made affordable housing contributions of $65 million in the third quarter of 2013. The principal assets of the FI banks are advances, federal funds sold, commercial paper, mortgage-backed securities, and GSE securities. The FI banks are required by regulation to hold collateral in excess of the actual loan amount for any given borrower. The FI banks are funded through the daily sale of debt securities in the global capital markets. All 12 FI banks are jointly and severally liable for the liabilities of each individual FI bank. Since August 2006, all 12 banks have been registered with the United States Securities and Exchange Commission, and all financial statements and other filings are available to the public at the SEC website. At September 30, 2013, each of the FI banks was in compliance with its statutory minimum capital requirements, and the FI bank system as a whole is well above its minimum capital requirements. On August 5, 2011, the Federal Housing Finance Agency announced that the FI banks had satisfied their obligation to make payments related to the Resolution Funding Corporation bonds. the banks were required to pay 20% of their net income toward the Ref Corp bond payments. Each bank now pays 20% of its net income into its own separate restricted retained earnings account until the account equals 1% of that bank unregistered trademark's outstanding consolidated obligations. History: as a result of the Great Depression, the FHA banks were established by the Federal Home Loan Bank Board pursuant to the Federal Home Loan Bank Act of 1932. This was in order to provide funds to building and loan institutions, providing liquidity and making mortgages available. As a result of the savings and loan crisis of the 1980s, the Financial Institutions Reform, Recovery and Enforcement Act of 1989 abolished the FHLBB and transferred oversight responsibility of the FHA banks to the Federal Housing Finance Board and regulatory responsibility to the Office of Thrift Supervision in the Department of the Treasury. FHA also allowed all federally insured depository institutions to join the FHA bank system, including commercial banks and credit unions. As a result of the late 2000s financial crisis, the Housing and Economic Recovery Act of 2008 replaced the FHFB with the Federal Housing Finance Agency. The Secretary of the Treasury was authorized to purchase FHA bank debt securities in any amount through December 31, 2009, after which the limit would return to the original $4 billion. On September 7, 2008, the U.S. Treasury announced a new credit facility for the three housing government-sponsored enterprises. This enabled the Secretary of the Treasury to purchase FHA bank debt in any amount subject to the pledging of advances and other assets as collateral. The authority for this facility expired on December 31, 2009. As a result of the late 2000s recession, Section 312 of the Dodd-Frank Wall Street Reform and Consumer Protection Act mandated merger of OTS with the Office of the Comptroller of the Currency, the Federal Deposit Insurance Corporation, the Federal Reserve Board of Governors, and the Consumer Financial Protection Bureau as of July 21, 2011. On July 31, 2014, it was announced that the Federal Home Loan Banks of Seattle and Des Moines were discussing a potential merger. This would be the first voluntary merger of members of the Federal Home Loan Bank system. Related legislation, to amend the Federal Home Loan Bank Act to authorize privately insured credit unions to become members of a Federal Home Loan Bank, a bill that would amend the Federal Home Loan Bank Act to treat certain privately insured credit unions as insured depository institutions for purposes of determining eligibility for membership in a Federal Home Loan Bank. This change would make such credit unions eligible for membership in the Federal Home Loan Bank system. See also, Farm Credit System, references. Further reading, for a list of articles discussing the Federal Home Loan Bank system, Fannie Mae, and Freddie Mac, see Fannie Mae and Freddie Mac, a bibliography. Susan M. Hoffman and Mark K. Castle, eds. Mission Expansion in the Federal Home Loan Bank System 208 pages, Thompson, James B. and Matthew Koeck. Federal Home Loan Banks, the Housing GSE that didn't unregistered trademark T. Bark in the Night. Economic Trends 09.23.10 online, external links, Council of FHA Banks, FHA Banks Office of Finance, Federal Housing Finance Agency, SEC filings from the FHA Banks, Federal Home Loan Bank of Atlanta, Federal Home Loan Bank of Boston, Federal Home Loan Bank of Chicago, Federal Home Loan Bank of Cincinnati, Federal Home Loan Bank of Dallas, Federal Home Loan Bank of Des Moines, Federal Home Loan Bank of Indianapolis, Federal Home Loan Bank of New York, Federal Home Loan Bank of Pittsburgh, Federal Home Loan Bank of San Francisco, Federal Home Loan Bank of Seattle, Federal Home Loan Bank of Topeka.